afternoon, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, February 17th. I'm sending this video out over the weekend so you guys can peruse at your leisure. Hope everybody is enjoying the long weekend. As we all know, equity markets are closed on Monday for President's Day, and futures are open a half a day. Forex is obviously open full day. Anyway, getting to the market. So what did we have? We had a quick recap. We mentioned about stocks looking to break out and or break down because we were in symmetrical triangles getting closer into the apex. So we wanted to see what price was doing, and then we would follow suit. However, the last 3 days of the trading week from last week, Wednesday, Thursday, and Friday, were very, very choppy. Not great trading. The volatility was not great. It's really what we call the bad volatility. It's not what we're looking for. We had markets that moved up, moved down, moved up, moved down, and then finally pushing to making new highs at the end of the day, frustrating a ton of traders. It is very frustrating when you get that type of volatility, and for sure that's not what I'm looking for. However, we did break out of symmetrical triangles, as you see in the front. This is the E-mini S&P 500 symmetrical triangle. We broke out the last 2 days, so you could see we are making new highs, intraday highs, right? You know, we made intraday highs for the day, and then, but that came with a price of that nasty volatility that what we're not looking to trade, and eventually it will subside, and the volatility will subside again, and price will start to move higher. Where do we go from here? Well, it looks like the path of least resistance, is higher, and that's what we're going to continue to stick with, buying pullbacks into support. I know hear a lot of naysayers. Oh, it's crazy that the markets are up here, and it is true. You know, it is a Fed-induced rally. I do think that markets are at one point in time are going to give us a pretty nasty correction, only because we haven't had an 8, 10, or 15% correction in years. The biggest, I think, was 5.5% in the last 3 years, and that's not healthy. That's not healthy for the markets, because we all know it's one-sided, and when the markets do start to correct, you get into a full. Let me backtrack. When the markets do start to pull back, that's what happens when you turn into, for a normal pullback turns into a full-blown correction. And I see that. I've seen it many times, and it's going to happen again. It's just a matter of when. We don't know. We're not market timers. We're traders, and we like to trade the trend. And right now it is up. And you can see here in the ES, like I mentioned before, we broke out of this symmetrical triangle, upper end of this trend line, which is now support. Even if we get a follow-through maybe on Tuesday, I've been mentioning their two targets, upside targets, is 2100, which is a nice round lot number, only 7 points away. And then the other area, the zone, would be the 2135, 2150, and then, of course, we would reevaluate it, okay? But that's where I'm looking for. Maybe we tag 2100 and we get a little bit of a pullback. Now, the pullback is going to be important. Why? Well, because we want to see that pullback come in just above this trend line support, now being support, and making that higher low from this previous low here. If, in fact, we get deep enough into this this triangle, back into this triangle, and we take this pivotal low out, then I think we could see at least a test here, and then who knows what would happen after we take this lower trend line out. So that's something that that we're going to keep an eye on when we do get a pullback, okay? But right now, it does look good that we will probably tag 2100 here on our first upside target. Let's go through the indices, and this is where we mentioned, I mentioned many times. Here's the S&P weekly chart. You can see we have a huge trend line dating back from October of 2012, the election year of 2012, Hurricane Sandy year, as you can see, and then we just had that touch, not even close to touching, touch, and then boom, we violated it once for 2 weeks. We came right back in it. We did it again, and we came back up again. Now, what's happening here, the Bollinger Bands are pinching, so this could be an expansion of volatility again to the upside. And it could take out this high. So the spider's looking good. We're back above the uptrend line. Weekly charts look fantastic. There's no reason to short this market at the moment. I think if you did that, you'd be crazy to do so. There's no signal at all to short this market, at least at the moment. Okay, daily chart of the S&P. Take a look. We mentioned these bull flags that were flying among us on these indices a few days ago, early last week, and then sure enough, look what happens. We get this beautiful break, and markets just start to move higher again. So we did identify this beautiful bull flag. We broke out, and we had Thursday and Friday making again new intraday highs breaking out here. So we'll see what happens. And look what happened here with the RSI and the MACD. If you remember, we were back in here. I said I'd like to see this break back above it, and sure enough, we are. And the markets are not even overbought on the momentum indicators, so there's plenty of room to run to the upside. McClellan Oscillator still reading, not overbought, so I didn't want to just waste time going through indicators when there's really no need to at the moment. So I want to concentrate more on the indices. All right, so SPDR's looking really good as well. Now you have the transports, which is a little bit of a concern. The transports haven't really moved and broken out of this, symmetrical triangle, descending triangle, whatever you want to call it. But we're still stuck here, and I think it needs to break out. This is our leader of the 5 indices that we follow, so we really need to break back above this to alleviate this lower low and lower high series. Once we break back above it, then I think that the markets will move higher as well. There's a lot going for the markets to at least move higher, and part of it is I want to show you is the XLK, right? Technology. What happens when you have the market rallying? Well, you need technology. There's 2 caveats here. You need technology, and we need banks and financials, right? Well, take a look at the XLK. Breaking out of this symmetrical triangle, gapping above resistance. When we get a gap like that, that's powerful. That is powerful. And it's on volume. I don't have it here, but it is volume. I made it really simple a chart just to show price. So we made these lower highs, lower lows, and lower highs, and boom, we broke back above. This here is powerful because what happens, all of the shorts are caught and now have to cover again, okay? So you're going to rally in tech, confirmed, okay? Let's take a look at the XLF. Here's a daily chart of the XLF. We just alleviated this downside pressure of making lower lows and lower highs. Now we're in a series of higher lows and higher highs. Again, very good for equities, okay? Very good for the U.S. markets, and that's a good sign. All right, take a look at the XLF weekly. This is another great thing here. We've been above this uptrend line for quite some time, back lower than the October 2012 lows. You could see this thing has never even briefly broke below it, but never closed below this trend line. Very powerful, this trend line. A break below this, I think the markets would be in trouble, at least the banks and financials for the short term. Now we need to take out this high here at 25. We take this out, I think all bets are off to the downside, and we continue to move higher until we get a caveat and or some sort of a risk event that we would to move lower. But right now that's not the case, okay? Let's take a look at the IWMs. Now, the weekly IWMs are being helped by the financials, right? With 25% weighted in banks and financials in the Russell 2000. This is another one of our key leaders here. When we break out on the weekly chart, there's blue skies, guys. There's plenty of room to run to the upside. Do not short the market at the moment, okay? Get a lot of emails. What do you think about shorting here? No, there's no signal. Do not short the market. Follow the trend. The trend is your friend. Plain and simple. So we broke out. Now, it's 1 week does not make a trend that we're going to move higher. I like to see some follow through the next week and maybe a pause above this resistance that is now support, okay? But yes, again, you can see here, everything is on the bull case. I'm looking for a short case here, a short sale case, and it's not, and I can't find one other than the transport's not really moving higher. All right, take a look at IWM Daily. We identified this beautiful bull flag, right? We broke out of the symmetrical triangle, and now we're taking out these highs. I said at one point, 1180 in the TF, that's the future, needs to hold. The TF held, and then 1200. Well, now we're at 121.53, so we're well above the 1200 in the Russell 2000 future. So this is now breaking out to the upside. Remember, we've had consolidation. You could see this crazy up and down. Pretty much all of 2014 without a little bit of push lower. Obviously, markets move lower here. But you could see this big range that we're in. We're starting to break out of this range here. You could see this. Look at this. This is just horrendous price action in the Russell. But if the Russell gets going, it's going to be a good trader. And I'll tell you why. Because once it trends, the Russell trends, and there's a lot of volatility in that. You're going to see a lot of guys trying to short this, and it's going to continue to move higher, okay? If the small caps move, there's an appetite for risk. That means that investors are feeling comfortable where the market is. So that means do not short the market, okay? So here is Russell. Here's the diamonds. Again, bull flag identified last week. You can see that in my previous videos. And again, now we're looking to challenge the highs here. Again, another good sign. It is a laggard. The Dow Jones is a laggard of the 5. But nonetheless, all firing on all signals. And here, lastly, is the Qs. As you can see here, we broke out a symmetrical triangle. Now we're at 2 standard deviations. Are we due for a little bit of a pullback? Yeah, of course. I mean, look, A pause or a pullback is healthy for the markets. I would love to see a correction, but that right now that's not the case. So let's see if we get a little bit of a pullback, make that higher low from this previous low, then I think that we're going to continue to move higher until there's some sort of a caveat, some sort of a risk event that's going to move this market lower. At the moment, there isn't, so I am looking for higher prices next week. Maybe a day or two of some weakness or a pause, a consolidation, but I do think we move higher, and I do think we test 2100. Hope you are going to enjoy the rest of the weekend, and we will see you with a new update on Wednesday. Have a great day, everyone.